What a roller coaster and volatile day in the stock market. The stock market initially sold off in the morning because the bond market sold off. The bond market and yields have an inverse relationship. Because the bond market continued to sell off, yields were still hovering close to 16-year highs around a level of 4.75%. We hit a level of 4.8% on Tuesday. And because bond yields are continuing to be that level, some people are saying bond yields could hit 5%, including bond investor Bill Gross. But either way, that was weighing on the stock market. However, around midday, Fed official Mary Daly said that the rapid increases in bond yields is equivalent to a Fed hike in and of itself, and acknowledging that and saying that the risk to high inflation and slowing economy are balanced. Because of that, the market started recovering and ended the day almost flat, but not quite. This combined with oil prices having their worst week since March, and WTI, a barrel of WTI oil is now at $82.50 for the lowest level since August 31st, which should ultimately transfer to lower gas prices at the pump in the coming weeks and months. So that was the other reason why I think the market recovered, is that the market really wanted to see oil prices come down, which would ultimately feed through in inflation. And then lastly, I don't think the markets ended positive for the main reason that investors are still anxious about tomorrow's jobs and unemployment report for September. People are still very anxious about that number because that number will really dictate if the Federal Reserve's rapid increases from last year and into this year is working in terms of slowing down the economy, because unfortunately the Fed wants to see a slightly cooler labor market in order for them to bring inflation down.